All right. Hello and welcome to our kickoff finalists. I know Einstein was supposed to be our main moderator for the session, but I'm stepping in to introduce you lovely individuals who's going to be kicking off this amazing summit. So, of course, I could read your amazing bios, but we always like to let you introduce yourself to the community. So without further ado, I'm going to start with Alex. Can we hear you?
Let's see. Can you hear me?
Yes, okay. Loud and clear. Welcome, Alex.
Delighted to be here, and good morning, everyone. So I work at the intersection of investing, innovation, and for me, a lot of thematics with impact. I work at a fund called Cathay Innovation, a globally focused investment fund based in Paris, investing across Asia, Europe, North America. We also have a Pan-Africa venture fund in partnership with Africa Invest. We're launching one in partnership in Latin America as well. And really the idea of supporting the best entrepreneurs wherever they are around the world, Series A through Series C. So that's my day job. And outside of work, I'm really passionate about the rise of innovation and entrepreneurship around the world. I just wrote a book with Harvard Business Review Press called Out Innovate, how global entrepreneurs from Delhi to Detroit are rewriting the rules of Silicon Valley, to really tell the story about what it takes to start and scale startups around the world.
Thank you so much, Alex. And thanks for introducing some of the content that you're bringing to the community at large. We'd love to hear a little bit more so the team could share links to that book that you just announced on the thread here. We would love to share that with the community. So next on the lineup, without further ado, I believe, Christine, I know we're going to call you back in, but let me just kick off and welcome John Simon. Welcome, Managing Partner of Total Impact Capital. How are you?
I'm great, Christine. Thank you. Thanks for having me. I'm very excited to be part of this incredible panel. I am the managing partner of an impact investing firm. We've been around for a bit more than a decade. We focus heavily on creating impact in the basic human needs space: health, water, food, home energy, things of that nature. We are largely in the impact first world. So we work with top-notch implementers on the ground who've already demonstrated an ability to create impact and now need capital to help them scale.
Thank you so much, John, and especially considering the conversation around impact. I think that's something that's really going to be a big component of today's conversation about how we could invest in impactful initiatives and companies that's really making a mark on this. Thank you for that.
I'm having some internet issues.
Well, we hear you, John. How are you?
Are folks able to hear me okay? I think some folks are frozen, but I think I'm doing okay. All right, I guess it's my turn. Sorry, apologies. I got kicked out of the stream the first time around too. And if I leave, it's nothing personal. I swear. So my name is John Gordon. I'm general partner at Second Order Ventures. I'm a healthcare investor with a background actually as a healthcare entrepreneur as well, focused on understanding the changes happening in healthcare and the implications of those for the major players in healthcare. So sort of looking at the environment in healthcare, which is has gone from innovation a decade ago when the Affordable Care Act passed to transformation over the past few years to ultimately disruption, which is coming in the next decade or so. And I would say with reasonable confidence that the healthcare system of a decade from now will look very different from the one we have today. And I think there's an amazing opportunity to build a system that's better for patients, it's more cost effective, higher quality, and I think venture capital has an important role to play.
Well received, John. Thank you so much for that kind introduction. And last but not least, Christine, how are you? Please introduce yourself to the community.
Okay, well, I hope this is working now. Great. So my name is Christine Tao. I'm the co-founder and CEO at Sounding Board. So I actually sit on the other side of the table. I'm the founder of a venture-backed startup called Sounding Board. And at Sounding Board, our vision is to help create the world's most impactful leaders. And we do that through a mixture of technology as well as a managed network of global leadership coaches. One of the things I think that I can kind of talk about is we actually raised and closed our Series A during the pandemic as a sole female founded company. In a year where venture capital to female-led companies actually dropped. So separate from our vision at the company of wanting to democratize access to leadership coaching and make that more accessible and scalable, I and Lori, my co-founder, also just have a personal passion around helping to think about ways that we can bring more inclusion, bring more diversity to the leadership pipeline across corporate America. So excited to be here and to certainly learn from my other panelists, and happy to share my own experiences as well.
Well received, Christine. Thank you so much for that kind of introduction. And of course, clarifying that you're on the other side of the table, because we also need all-inclusive perspective on this dialogue. So with that, let's dive right in. So the theme of this panel is about capital access redefined, fundraising in a post-pandemic era. And Christine, you kind of kicked it off with, your experience as a founder raising. So we'll start there, and then we'll move to Alex Ness to share about his perspective on capital raising during this time. So Christine, share with us, I guess, just quick insight as to how were you able to raise during this pandemic? I think many people have expressed the same sentiments that this is also probably the best time to fundraise as an entrepreneur. Some have said it's the worst time. What is your perspective? How can people learn from your roadmap into getting capital funding for your business and your venture?
Sure. And certainly the other panelists will have a much more macro view. But, so we, Sounding Board's been around since about 2016. We didn't raise venture capital until the end of 2017. So I bootstrapped the company to start. And to be honest, as a female founding team, it was a struggle for me to navigate being able to engage with investors, especially as a first-time founder. And so coming into the pandemic, we actually hadn't planned on raising funds, but Sounding Board as a business was lucky enough that we were able to see our business really accelerate during COVID because we have a remote-first solution. So I went from, a seed rounds that were challenging to navigate to actually an oversubscribed A that closed in record time. And for me, that was unexpected. But I think one of the main things that I learned, at least as a founder in that process, was, one of the benefits during sort of remote work was just the access that I had to investors. Instead of having to schlep down to Sand Hill, I'm in Bay Area, and maybe squeeze in a meeting or two a day, I was able to engage with a larger pool of investors, oftentimes had more access to decision makers because there just was that ability to be able to meet. And then for me as a founder, I really focused on my narrative, because I think the news that you see out there is that there seems like there's capital everywhere. So as a founder, that can often feel really discouraging if that's not your individual experience. But when you come down and sort of break that down, what I've really seen is that there's more capital flowing to a smaller set of companies. And so it's almost this sort of feeling of the have and have nots. And so your ability as a founder, as an entrepreneur, to really be able to clearly narrate your story and the opportunity for investors, I think is even more critical than ever before.
Well said. And with that said, I think, you made it very clear, being very clear about the narrative of the story and why invest now, and especially the time sensitivity of us going back to, I guess, the new normal. I would like to pass it over to Alex to hear his perspective on the fundraising on the other side of the table.
And I resonate a lot with much of what Christine said. And by the way, apologies in advance if you hear my daughter in the background exclaiming her enthusiasm for the Global Investment Summit, my 17-month-old. But I think the pandemic did two things at once, right? On the one hand, it decreased the friction of being anywhere in the world to raise money from anyone else, right? So because of Zoom and et cetera. And on the other hand, I actually think that partnering with a VC and vice versa is actually a really big decision and a relationship one. I teach an MBA class, and I often tell my students the average venture relationship is longer than the average American marriage. And it actually, you have to really think very carefully about that decision, because that is a partner that's going to be alongside you for a long time, and making sure incentives are aligned, making sure you have a similar vision for what you want. And so I think that's a little bit of this tug of war that's happening. So I think that's one dimension. But taking this global lens of innovation, which is really the one that I have, I would say that it's never been better. There's still so much to do, and there's still a huge amounts of gaps in inequity and capital, et cetera. But in 2013, you would have been right to say all the action in innovation was in Silicon Valley and a handful of places. 4 startup ecosystems created $1 billion business ever in 2013. Today, over 85 startup ecosystems have created $1 billion business. That's rising every day. And there are more and more venture funds locally. There's more and more capital, even from Silicon Valley and elsewhere, looking and interested to invest everywhere. But it is a tale of the haves and have-nots. It is not 100% equally distributed. For instance, fintech and healthcare are 2 sectors that are very hot right now, and those have garnered a lot more capital. But other sectors might not have as much, and so there are some tensions. It isn't unanimous, and so perhaps a couple of strategies that I might suggest to the founders in the audience, building on what Christine said. I think 1, it is a long-term relationship, and so don't rush it. I think 2, as you have conversations with firms, and I'm taking a little bit of the lens of a little bit of a later stage investor. We invest kind of series A, B, and C, post kind of seed round. But thinking about the partner that you're working with, but also thinking about the whole capabilities of the firm, and what are the other things that group might be bringing, might complement others. And 3, as a founder, it behooves you also to create a competitive dynamic that'll drive more capital, that'll drive higher price, that'll drive those things. And then lastly, I think to Christine's point of telling the story, I think the pandemic has shown a light on these massive gaps in our society, in our economy, et cetera, that I think we have a unique opportunity to solve with a variety of vectors. And I think part of this is also being able to really explain the unique model, why now, all that side of it, which is not easy, but I think really an opportunity at this moment. So I'll pause there.
No, well received. And I will be at the concluding remark coming back to like advice that you provide other entrepreneurs, because there's a big audience of entrepreneurs watching this event trying to figure out the secret to get access to capital. And then just diving into this, in terms of like impact space. John, can you share what investments or what target entrepreneurs you're looking at in this ecosystem when it comes to investment? Is there any particular type of entrepreneurs you're looking for?
So for us, we take a bit of a unique model. Like I say, we're impact first. So we focus on social enterprises primarily, and then try and drive capital scale, which in many of these social enterprises, they're not looking at, a 10x multiple down the future. They're looking at trying to create steady cash flow. So often we're using a fixed income or mezzanine type debt product instead of just a pure equity investment. And in many cases, we're also creating financing vehicles that help scale what NGOs do. And a lot of what we do is work out what type of financial product would make sense in that environment. So for our work, it's heavily focused on folks, like I say, who've created a track record on impact, not necessarily on the financial side. And then how do we convert that into something that's attractive for financiers? I would say the environment for raising money from impact investors is as good as it's ever been, in my experience. And like I say, we've been at this 10 years. Raising money is never easy. I sympathize very much with Christine's point about looking around and seeing how is everyone else getting funded and I'm not. I don't think I've ever met someone raising capital who hasn't felt that way. Even folks who've raised 8 figures, 9 figures of capital, it always seems that someone else is getting more capital than you are. So I think it's always a challenging environment. But I would say that especially for folks who are looking for a high impact return alongside a reasonable financial return, and you can always debate what is reasonable, this is actually a very good environment. I don't think the COVID, well, perhaps COVID has at some level accelerated that as people think a little bit about how the impact of what they do has on the broader world and the broader ecosystem. But it is good to see more and more players from more and more different types of backgrounds and institutions who are looking for an impact proposition alongside of financial.
Thanks for sharing that. And of course, last but not least, John, I would love to hear your perspective on this. And we're talking about capital raising during the pandemic. Thoughts, ideas, what are you looking at, and what should people know to really get access to capital?
Sounds great. And apologies again for disappearing there, but I'm on my phone now. So, and actually, kindly, someone was updating the firm names. I'm actually Second Order Ventures, not Winter Street. That's my old firm. Yeah, so it's a really interesting market right now. I think it's stabilized is not the right word, but if you look about a year ago, maybe 12 months ago, kind of like in the first post lockdown wave, there was a lot of retrenchment. people took a step back and said, okay, what the heck's going on here? What does it all mean? You saw the stock market plummet. All of a sudden, people are saying, is this 2008 again? And then, well, one is the Fed basically made the money even looser. It was loose already, and they just, we just, enormous amount of fiscal stimulus that came in, and all of a sudden people looked around and said, okay, we haven't, yes, maybe investing in restaurant tech may not be the right thing right now, but there's a whole lot of other stuff going on and a lot of innovation. In fact, there's a lot of innovation that's being spurred right now. I don't know if anyone saw this. There was a meme going around Twitter in like June of last year that said, who led your digital transformation, CEO, CIO, or COVID-19? And it really was, there was that enormous push for digital transformation, and people saw, okay, what would have been 10, 20 years of change happened in 6 months. And so that's the sort of thing that gets folks like us super excited. And so between that and the loose money policy, and a lot of dry powder out in the marketplace, people are rushing to put capital at play. And then the investors who are providing the limited partners who are putting the capital into the funds, they want to put more money out there because they see the opportunity as well. So it became this virtuous or vicious circle, depending on which side, you were kind of looking at it from. And, today, I think we've seen some things that, I'm going to talk from a healthcare perspective because that's what I know. Some things that have gotten an enormous amount of attention and are now sort of seeing them wane a little bit. Like telehealth is fairly played out at this point, not in terms of a modality, but in terms from an investment standpoint. It's like saying a decade ago you were investing in mobile. It's sort of like it's an underlying technology. It's not a fundamental thing. It's not a business model in itself. But rather what you're seeing is these things being integrated into bigger pieces. And as these exits potentially are getting bigger in cases, so you've got companies that have SPAC'd, companies that have IPO'd, all of a sudden you have people out there saying, okay, I can actually go out and acquire other stuff and build across a platform. So Amwell, for instance, American Well, just acquired Conversa, which is a chatbot company. And so you're starting to see, for instance, this creation of full stack primary care, which is bot plus telehealth plus clinic plus plus home services, all of a sudden becomes this full model of primary care. So the sort of things that I'm excited about in two areas is, one is, can you build a more full suite of services? Because healthcare has been sort of, I don't know if plagued is the right word, but sort of maybe beset by huge numbers of point solutions over the last decade. And that makes sense because you have to start somewhere. You can't boil the ocean. But now that we've gone from, as I was saying, innovation to transformation and looking towards disruption, you need things that are scaling. And so if you can see things pointing in the direction of scale, whether they're technology applications that are broadly applied, like something like natural language processing, or these broader primary care sort of full stack models, those are all very interesting. And I think the cool thing, to get back to some of the main points of the conference, is you're starting to see more attention paid to populations that got less attention in the past. There's been a huge push. Mental health has been a huge space that's gotten an enormous amount of attention that was so underserved, not just from a funding standpoint, but societally. And bravo to Simone Biles for standing up and raising her hand and bringing huge attention to that. I mean, she literally took one for the team there. Yeah. And other areas, a lot of sort of disadvantaged populations, bringing a lot of attention to what are called dual eligibles, people with Medicare and Medicaid, who tend to be disproportionately minority populations. There's been Femtech has been a huge area of growth. So just services, all kinds of services for women, everything from childbirth to incontinence, and then to infertility, and also LGBTQIA+ populations as well. That's been a very hot area. So there's some really exciting stuff touching all kinds of areas. So I guess it's getting better. I'll put it that way.
No, well said. And I think, you also brought in the capital easing that's been happening across so many different governments around the world, whether it's the US, Europe, even different parts of Africa and emerging markets globally. So thank you for bringing that into conversation. And with that, I think obviously these are brief panels, so I'll give another round for each of you to just share, what do you see the future of capital to be, especially post-pandemic? We're now transitioning to a new normal. We're all going back to work. There's conversations about vaccinations, about, you know, this huge, massive global experiment that we all experience, working remotely, building remotely, starting businesses remotely. There's definitely a lot to be said about how society will progress post this pandemic. So I'll start with Christine from an entrepreneur perspective. How do you believe capital raising will be in the future? And furthermore, how will you be building your business with this new, fresh wave of capital? And what advice do you have for the audience at large?
Okay, well, I'll go fast. I mean, I think ultimately, you know, as a founder, like my directive is still the same. You know, I've got to build a high growth business and one that's addressing a huge market opportunity that's growing, and to execute against that vision. And I think if you can continue to do that, like you'll always have, and now I think more than ever, access to multiple forms of capital. You know, I think that's one thing we're seeing from the founder side. There's a lot of innovation, even where, you know, the investors themselves, because there's competition for really great deals, have to get creative around how they're providing that capital. And we have lots of options as founders as well. So the last thing I would just say is, I know I'm on that side where it does feel like no matter what, I really resonate with John said. It always feels like, you know, somebody else had it easier than you when it comes to raising capital. But just know that it's a hard slog. It's a volume game. You have to go out there and build the relationships, and building those relationships early, because it is a marriage, like Alex said. And we've been fortunate to have very great investors around the table that have a long-term view on the business and the opportunity.
Well said on that, on building relationships. And of course, I think that sentiment of like, you know, why is this? Because, you know, every headline now is about capital being raised in the like 6-figure range. I'm like, I didn't even know this capital even existed. So thank you for sharing that experience from an entrepreneur's perspective. I'm passing now over to Alex. Your thoughts about the way fundraising and capital raising will be in the future for entrepreneurs from your side of the table.
I'm incredibly optimistic on that dimension. I think, one, I think we're going to see more, and I think we're going to see it all over. I think we're going to see the demonstration of scaled startups all over the world. And I think that is going to help precipitate and accelerate capital to support the next generation of founders. So I think that's one. I think second, I think that this question of impact, and a bunch of us around the table are thinking about it, is going to become more and more important. Everything from measurement of negative externalities through ESG to very positive thinking about, hey, what are the business models that can target these large and intractable problems. I think that's going to continue becoming increasingly important. And then third, you know, I think while there's so much deal activity happening today, and while it, in some ways it can sometimes feel a little bit transactional when it's all over Zoom, I actually think the relationship side will continue to matter. And I think that will come back in a big way when folks are able to travel more. So those are 3 thoughts.
Well, at least you're optimistic. I think that's always,
you have to be perennially optimistic.
No, well said. I mean, we wouldn't be having the GSC Global Investment Summit if we weren't excited about the opportunities that's available. So thank you for sharing that, because we have been seeing investors share their pessimism about too much free capital flowing into the ecosystem and how that changes valuations, perspectives, and just also just like sheer hard work amongst entrepreneurs bootstrapping and building. So hearing your perspective on that is very well received, because we definitely need to see more of it in action. So thank you, Alex, for sharing that. Really, really appreciate that. Moving on to John, Simon, your thoughts.
I have to say, I am optimistic, but I do also share some of the concern that there is a little bit too much capital that may be easy money, and things like the SPAC craze may be speaking that. I mean, I think John mentioned, you know, what's happened in terms of the quantitative easing and all the liquidity that the Fed has put into the marketplace. And for us in the impact investing world, low interest rates have been fantastic, because I think in this environment of low interest rates, people say, look, it's worth looking for impact. If all I can get on a treasury is 1%, or in Europe I'm getting negative interest rates, and I can get 5% on this high impact investment, I'm willing to do that. I am concerned what happens if we start seeing inflation and then interest rates rise up, and whether we'll see a bit of a squeeze in the short term. But in the long term, I absolutely am optimistic that that there has been a fundamental change in how people are approaching investing. That people are looking to say, what is the value that we're creating with this investment, and then how do I make a long-term return out of that, as opposed to what I think was largely what happening leading up to the financial crisis, where people were saying, what's the return? How do I make that as quickly and as short-term as possible? And oh, if there's any value at all, well, that's a nice bonus if it's there. And so I do think going forward, this idea that people are going to look and ask the question, where is the social value in this, is going to be good for us, and it's going to be good for the economy and people overall.
Well received on that. Well received. And I think you also just mentioned about the SPAC announcements. I mean, that's definitely been on everyone's minds and conversation lately. We will be speaking about that later on in future panels about the whole SPAC and company just emerging from that type of capital investment vehicle. So John Gordon, last but not least, would love to hear your final thoughts on where you see the future of capital raising from your perspective.
Sure. So I guess I'll hedge on both sides and to say that, you know, it's exciting to see that money is flowing to places that it hasn't flowed to in the past, and more attention is being paid. I don't think we're, you know, I don't think the scales will be fully rebalanced in the next year or two, but it's a step in the right direction, and I think that's something that we should at least acknowledge and cheer on to keep it going in that direction. I do agree with John though that you know, everyone needs to be cautious. I think on both sides. The investors, obviously, you know, the investors need to be cautious. You know, you see things when the markets get really hot. You also see a lot of very founder-friendly terms that sometimes can create trouble. You know, you just look at what happened with whatchamacallit,
Airbnb.
Not Airbnb, the office one. Why is that not coming to me?
WeWork.
Thank you. I knew it started with a W. It's Friday. Sorry, guys. You know, just some of the things that happened with WeWork and some stuff you'd seen past that. But the other side is when all that easy money is out there, entrepreneurs are like, oh my God, look at the valuation. I was, you know, messaging with someone recently who's just like, yeah, I think we can go from this last round at 100 pre to the next one at $1 billion. And there are implications to that. That's a really exciting number to get to. But on the other hand, once you get on that train, you've got to ride that train until it either runs into a wall or you can get it to the station safely. And there's implications, that very significant implications for yourself as the CEO and the whole team as well. And I think that's something that, you know, when in an era of easy, and I'm going to put that in quotation marks, money's never easy, as we all agreed on in this panel. But in an era where, I guess, looser money, there are implications to taking those big dollars and those big valuations that I think really everyone needs to think through and just be careful about, because it can come back to haunt you later.
Yeah, well said. I mean, I think that's the balance of entrepreneurs, right? Getting access to capital and know like how it's going to impact your burn rate, your long run, and just in terms of valuation, like you said, burnout. I think that's another conversation right now. Entrepreneurs are dealing with, you know, fundraising during the pandemic virtually, and when to turn the on and off switch in terms of engaging with investors. So with that, I do want to say again, thank you so much to each and every one of you. I know it was a short panel, but I do see a lot of comments on the chat feed of people asking, you know, hey, like, it's good to hear from both sides of the table how you see fundraising on post-pandemic. We are transitioning. We still are in the midst of a pandemic. I want to re-emphasize that. We're not out of the woods yet. And so it's very interesting to see people's reactions and perspectives when it comes to what will happen next. And we appreciate your comments and feedback. And of course, I do want to reiterate again, Alex's book, Out Innovate, is out. So the team will be sharing links on that on social media. Of course, we'll reshare LinkedIn social media feeds, because each of you will be bombarded at the end of this conference on follow-ups. But again, thank you so much for joining us for the GSC Global Investment Summit. It was my honor and pleasure to welcome you to the GSC community.
Thank
you.
Thank you all. Appreciate it.